Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, it's June 8th, 2012. We're going to do like we do every Friday and go over all the major markets that we track at PerfectStockAlert.com so that you know everything I know moving into the week ahead. We're going to start off with Australia's market, the AORD. You can see that right now we have a bearish engulfing signal, which is basically another form of a sell signal there. It's nothing bullish about this particular condition here, but we're still short this position. A person could get short here and keep a tight stop off the high here, but like I said, we're already short from back here, so we're not really a big deal here. We haven't been stopped out this time. We kept our stop right here. The main thing with this chart, and you'll see it again with several other charts, here's the main thing with this. Number one, of course, you're going to be the overall trend is still down. You still have a low series of lows, lower series of highs. There's just clearly defined downtrend, so you want to be looking to work with that trend. I mean, you find short ways to go short in this market as opposed to trying to be a buyer in a downtrend. You don't want to do that. The other thing here is that you're going to see in a lot of different charts that we're going to show you today, there's potential for a move to break out of this high point here. We didn't do it here, but it could have happened, and it could still happen if you get some kind of news out of the market next week or something like that. You could see a move higher. The main thing I would talk about that would be the fact that if you get any move up in this range here, you're going to find resistance, and your close up would be about this range here somewhere. And the thing that you're going to look at then will be this high close here and this lower close here. And that would be at a downtrend situation here. The ultimate oscillator during the same time period would not be confirming that. It would be telling you you have a bearish divergence, telling you that any move up in this range would be unsustainable, would be something you'd be looking for a short opportunity again. So there's nothing here that would be construed as bullish. There's no way to turn this into a bullish situation. Even if you got a higher series of highs, you could not turn this into a bullish scenario. The Dow Jones Industrial Average is the same basic overall picture. We showed you that you could have been taking a short position today after we signaled after yesterday's close. Told you if you went lower, which you did, you could have started shorting with the stop set off of this high. Those of you who have done that, that's fine. You can do that. You have not been stopped out. The main thing here, again, if you do get stopped out, if you see its market move a little bit higher, that's fine. It can happen, and you may be stopped out. But again, this would still simply create another bearish divergence, which would tell you that the entire rally is unsustainable. It would be erased. You'd look for the whole thing to pull back down and test the previous low. So be looking for this as either a short opportunity or be watching it next week to get short at some later point in time in the week. Which I think in this scenario, because you closed so close to the stop loss limit there, you're quite likely you could get stopped out in this scenario. But the first thing I would do after being stopped out is sit back and wait and look for another signal, another shooting star formation, bearish divergence, something of that nature to tell me to get short. And I would expect that to happen if you had like a Monday was an up day or something like that. I would expect it to happen sooner in the week rather than later because you've already had 1, 2, 3, 4 consecutive days to the upside. You know how this game is played. No market moves straight up or straight down. You get a certain number of days to the upside, and then you get above average conditions. Typically, 5 is within average. You jump up to 6, now you're getting above average conditions. Here you have 5 consecutive down days, 1, 2, 3, 4, 5. Here you have 1, 2, 3, 4 consecutive days to the upside. These are things that you should be also noticing on this chart. Looking now at the French CAC 40 index, you can see that I've marked this chart saying that you can actually start shorting here. You got the shooting star formation here. The following day, give you confirmation with lower low and lower high. So this would be a short opportunity with the stop set off of one sit higher than this high point here. That makes perfect sense to me as well. There's nothing here that's bullish. Back here, we saw this situation here looking like it was rolling over, so falling below this support line. So we said you could short there. We get a little couple days of sell off, then we bounce back up here, same level. Do stop out the short here, but we immediately get on the same exact day another sell signal right there. So there's the same sell pressure that was there before. It's still there. In fact, it's stronger now than it was before. I'd be looking for this thing to peak out pretty soon as well. But again, we still have news that can come out this week and tell you, Spain's got a little bank refinancing or something of that nature going on, and that could drive markets up for a day or two. But again, the charts are clearly telling you you should be selling these markets, not buying them. Looking now at the FTSE MIB or the Milan market, those of you who are trading over there in Italy, you can see that you have broken out to a higher high, but again, you get a sell signal. You get a shooting star formation that's confirmed today with a lower low and a lower series of highs, so we mark that as being something you're looking to short here. You also have to point out this low point here and this high point here. This is a higher series of highs and a lower series of lows. What does that tell you when you're getting conflicting signals? It tells you look for the market to move sideways. So in this scenario here, I would expect this sideways market to continue until you get greater development on the Europe front. There's, Greece has got an election coming up. Things like that is going to move markets when they happen. And right now, looking at the charts, I would say moving sideways and look for a break to the downside. Looking at the German DAX composite, you can see we have several different indications here, and none of them are good for bulls. They're all good for bears. You have the shooting star formation here. You get confirmation on today's activity here, so I'd be shorting this with stop set off this high point here, one cent above that. You'll notice where that high came into play was also at the 200-day moving average, means that you're finding resistance there. When you are in a bull market, you would find support there. In a bear market, you'll find resistance there. This is the first chart we're looking at today that's showing that clearly defined resistance at the 200-day moving average. A very bearish chart here. I would stay short. You're looking for more short opportunities if I were stopped out, because you already have a situation where you've got this high close here, and the current close here is trending down. Corresponding time period, you can see that you have a high point here, higher high already in play. You have another bear setup forming, telling you that any rally here will be unsustainable. You are going lower. So again, I would be looking for sell opportunities in this market as well. Gold chart we covered yesterday. The price of gold is actually peaked out. Here's your sell signal, your shooting star formation. Previous support is where you're now finding resistance at. That makes sense. Any little signal like you get here, the little hammer candlestick formation that could be a buy signal, would not be true, would not be really strong. Not something I want to buy, because you have that overhead resistance right above you. Where are you going? Nowhere. You may test that high, but you're going to find the same thing, and you're going to turn around and sell off again. The Hong Kong Hang Seng Index, this one I'm going to leave alone for now. We talked about this shooting star formation here being a sell signal, but the following day she gapped way down to this point here, so I didn't jump on that. You have had an opportunity to get short during this little rise here. If you wanted to do that, you could have done so. I haven't, but I'm just going to watch this chart. Again, still seeing lower series of highs, lower series of lows. I don't like this chart for a buy, of course, but I would be looking again for another sell signal before I got short here. The BSE India Bombay Stock Exchange. This market has had 5 consecutive days to the upside. 1, 2, 3, 4, and 5, with a hanging man candlestick now on the final day. Also touching resistance of the 50-day moving average and the 200-day moving average, where we already have a bearish crossover there. And you are up above the 70 line, the ultimate oscillator, which is where you find your resistance point, where you find your overbought condition here. So these are the situations that I'm looking for next week to be a nice sell opportunity. Like I said, 5 consecutive days to the upside is on the high end of the average. Another day to the upside would be above average, unsustainable condition, that type of thing. I would be looking for a shooting star formation about this level. Also, for the reason that we talked about in the past, you have previous support here that broke down. That means that support's now acting as resistance. And again, we've already talked about the resistance of the 50-day and the 200-day moving average. I'd be looking to get short on this next week. Looking now at the Japan iShares, the EWJ. This one we've already been stopped out of, took some profits back in there in this time period. You can see in this situation right now, we had a move to the upside here. No shooting star formation formed. You did get a higher series of highs, but you've also got this lower series of lows. So you're trending like this, here and here, which basically tells you look for this direction. Just move sideways in a little base formation until we get news that will cause a break of this support, like we've seen on this one back here as well. So remember, in these situations, whenever you're looking at these markets moving sideways, sometimes they're easier to trade than others. Right now, I don't see a shooting star formation, so I didn't take it as a short opportunity, and I'll just let her move sideways until we either get a breakdown of support, this previous low point here, or something else that I can trade. Right now, just watch it. The London Financial Times Index showing a bit more strength than we saw on the German DAX composite or the French markets or the MIB. However, in this case, like we've already talked about all the other ones, any move to the upside here won't really matter. You've got major issues to deal with here, including the fact that you have a bearish divergence forming. Even if you were to make a move above here and close above those 50-day and 200-day moving averages, and we put your ultimate oscillator up here in the above the 70 line, then you have a scenario where you have, again, high points here, higher highs trending up like that, corresponding close here, and to this point, you have another bearish setup telling you the entire rally will be unsustainable anyway. And so again, we are going to move lower. What we were basically doing here was moving sideways for a while. Now we're attempting a bounce here off of some kind of news and hope that Spain gets resolved over the weekend. It's not going to happen, and any move to the upside, continuing to the upside, we'll be looking for a sell signal, look for another shooting star formation like we've seen back here or back here. Those are the things that I'll be looking for, or back here. That's what I'm always looking for, but I'll be looking for that next week. The NASDAQ, we saw this, we didn't talk about it yesterday. I think we didn't show the chart, but we talked about it a little bit. But basically you had dark cloud cover formation yesterday, which is not necessarily the same thing as a shooting star formation like you see over here. So we've not been short here. We haven't taken a short opportunity here. I want to, though. I really want to get short this market for a couple different reasons. Of course, number one being the fact that you have this bearish divergence forming again. We've talked about that in the past when you had this one going on here. We told you look at this close here, look at this lower close here. It's trending down at the corresponding time period. An ultimate oscillator, high point here, higher high here, trending up. It tells you that this move here is unsustainable, will fail, will test the previous low, will go lower. That's exactly what happened. Now we're doing the exact same thing, setting up another one. You couldn't get bigger than this, meaning that you could continue to move to the upside here. It wouldn't matter. It would not change anything. You still going to have to deal with the fact that you've got this huge move here, and then you've got this lower move here. Even if you broke out beyond this point, you would end up having your ultimate oscillator up above the 70 line. This one never got above 70. You just form another bearish divergence. Nothing on this chart should tell you to be a buyer. Everything should tell you this whole rally here is not to be trusted. Look for the opportunity to get short, and that would be, of course, another shooting star formation. I would definitely like to see that. Looking now at the XOI oil index, whenever the economy is perceived, the global economy is perceived to be poor or doing poor, then you will see the price of oil fall. That's what we're seeing for a while now, and this continues to be the case. We did have a move up here, which we actually got stopped out of back here of our previous short. We jumped up here. We got another shooting star formation here, confirmation of a lower low and lower high the following day. You can short here with a tight stop. At this point, you already have a bearish divergence in play, and again, it would do the exact same thing if you were to see a breakout of that and move up a little bit higher and then form another sell signal. You, of course, would want to take that because you would still have the ultimate oscillator at that point would be up to 70 line. Previous one was not. You'd be trending like this. And so again, when it's not confirmed and you're getting lower series of lows on the price activity, it's just a bearish divergence formation again. So that's the main thing you're going to see, the running thread across many different markets out there. Is always the same thing. Even if we move to the upside, it's not to be trusted. Looking at the UUP, or the US Dollar Index Bullish Fund, you can see that we did pull back down here. We talked about this a while back, down to the middle Bollinger Band line, but we didn't get a hammer candlestick formation, and therefore I passed on the trade. Didn't want to take that opportunity. It wouldn't have mattered anyway. Even if I had marked it as being something I'd buy, the following day she gapped up here, which I'm not going to chase the chart, of course. So this is not something I'll be messing with at this time. But any pullback that I get back here, I am looking for an opportunity to get long, and I want to do that with the right signals. Not a shooting star formation, but an inverted hammer or a hammer candlestick formation. We'll talk about that when we actually get around to seeing them. But whenever that happens, we're looking for this as being another buy opportunity for the US dollar to go higher, and at that time also stocks will be going lower. Remember, whenever people sell stocks, which will eventually happen later this following week, when that happens, people sell stocks, they have to buy dollars, and that drives the price of the dollar higher. The Russell 2000 Small Cap Index, this one is much like the NASDAQ, giving us dark cloud cover yesterday, and then we'll move back in the other direction today. No real move here. There's no higher high. There's nothing here to actually change or even bring into question a change in the overall trend, which is clearly down at this time. Even if you get a move to the upside, don't be buying at that point. If you are a bullish trader, if you get a breakout to the upside at this point, being closed high at that point there. If you get that, you will find that your ultimate oscillator will be up there at the 70 line at that particular point in time. It's not where you want to be doing your buying. You will also find resistance at the previous support that was here. So none of this would be something you want to buy. And I don't care how much higher it goes here, just leave it alone. You want to be a buyer on a pullback if you were bullish, not in this situation of a breakout of a higher series of previous highs, something like that. So again, no reason to buy these markets at this time. Looking at the SPX, or the S&P 500 Large Cap Index, same bearish divergence we talked about yesterday, or bear setup, depending on how it plays out. Right now we have a point indicated that you could get short if you had a lower low today, which you did from previous in the previous trading day. So you could be short. The stop would be right here if that's the case. If you get stopped out, be looking for another opportunity to get short again. I keep saying if you get stopped out because sometimes you will be stopped out in a trade, in a scenario like that. And that's fine. Back here we talked about you were moving up to the upside here. It was unsustainable rally. We tried to short it here. We got stopped out the very next day. We got a shooting star formation. We said a short the next day. So that can happen. You can get stopped out and then still be right. Just your timing was off there. And that's fine. Just work with the chart, not against it. Right now this chart is clearly moving in the downward direction. A lower series of highs, a lower series of lows. Work with the trend, not against it. A quick look here at the silver chart. This one is actually, it's difficult to call. If you are on the side of the fence that you believe that there's going to be all kinds of stimulus thrown at the market, then you'll be thinking that silver and gold would be a good place to put your money. And that may be the case. If you are bullish silver and gold, you'd be trading this really simple. You use a tight stop off of today's low and be a buyer of any move that you saw higher than today's high. So that would be your theory. You'd be moving to the upside. However, I'm not going to do that, and like I talked about on the gold chart, I don't see any move to the upside being sustainable because you got a lot of resistance there. You see that a little bit here in silver as well. You've got the following day, it turns around and sells it all back off that it previously had made the move to the upside. It doesn't give you a complete sell-off though, because you don't get a bearish engulfing. However, if we look at the volume levels, we can see that sellers are still in control here, and this is not something that I want to be buying into here. And that's just my opinion. There's other people out there who are going to say, no, I'm going to be a buyer, expecting that the dollars will be devalued because of all the stimulus that's thrown out there at the markets. If that's your strategy, that's fine. Just keep a tight stop on your position because, again, these things fall apart really easy. Looking now at Canada's market, the Toronto Stock Exchange, the TSX, you can see another shooting star formation here and another one followed here after you bounce up to it. You did get a higher high though. You get a higher high point here, then you had back here. So some people will say, hey, we're changing, we're moving in another direction. No, we're not. If you actually look at the close here and the close of this candlestick, you can see that you are trending up. You get the corresponding time period in the same period here, high point here and the lower high here. This is trending down. It's a bearish divergence telling you this is not sustainable. It's going to fall apart, and that's exactly what happened. Looking now at the VIX, or the Volatility Index, this one runs the inverse of the S&P 500, and this one I almost took a long position on, but it was intraday, so I couldn't do that. I want to wait for the end of the day to see what the candlestick actually closes. We actually had formed this much better looking hammer candlestick formation before the close, but then by the close we had shaken a lot of that off. Right now, if someone says I'm going to be a buyer of the VIX with a tight stop set off today's low, I would understand that. I'm just going to wait one more day and see if I can't get a better candlestick formation, a nice hammer candlestick formation, really strong one. If I get something like this over here, looking like a hammer candlestick, then I would mark it and say yes, I'd be a buyer of that situation there with a tight stop set off the low. But right now, I'm not. I am seeing support still at the old 50-day moving average here, which makes sense. That means you're going to find resistance at the 50-day moving average on the S&P 500. They run the inverse of one another. So that all makes sense to me. I would keep trading this in that particular fashion as long as the trend is up. And right now the trend is clearly up. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. It's the weekend, so enjoy it and be safe out there and share our videos online. I want to point out, though, on every chart I've looked at, all but maybe silver, if you were to be really particular, every chart I look at is bearish and tells you the same thing. And get away from buying stocks and start trading or buying things that are going to go up while markets go lower, such as the VIX you could buy if the markets go lower, or when they go lower, I should say. And again, that should be sometime next week. You should be seeing some sell signals forming if we haven't already. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.